Some of the biggest crypto millionaires were made during the nastiest market crashes while the rest of y'all were sleeping or panic selling. Worst moments turned scrappy investors into millionaires. Crash number 1, the 2011 MT-GOX meltdown. Bitcoin for a penny. Picture it? June 2011. Bitcoin is this nerdy internet money that just had its first big pump. It went from literally pennies to about $30 a coin. People are finally taking notice. Whoa, this magic internet coin is worth 30 bucks. Then bam, the biggest and basically only Bitcoin exchange at the time, MT-GOX, gets hacked to hell. I'm talking, someone literally broke in and started dumping Bitcoins for fractions of a cent. The price plunged from $17 all the way down to 1 cent on the exchange. A freaking penny, man. Practically free. Folks on the forum were losing their minds. Imagine watching your stash go from worth a used car to basically nothing in minutes. MT-GOX shut down trading to stop the bleeding. Turns out some hacker got into an admin account, created a bunch of fake Bitcoins, and triggered a mass sell-off. They stole like 850,000 BTC. Yep, hundreds of millions even at those prices. It was the Wild West back then with zero security. So trigger. A major hack and exchange failure. Extent of drop, effectively 99% in seconds if you count that penny wick. Even after things stabilized, Bitcoin stayed around $2 to $4 in the aftermath, and a drop of about 94% from the peak. Can you imagine? $1,000 turns into 60 bucks. Most people's stomachs couldn't handle that ride. So what did smart investors do? Well, first off, there weren't that many investors back then. Mostly hardcore cypherpunks and geeks. But the ones who truly believed in Bitcoin's vision, they held on for dear life. Some absolute mad lads even bought during that chaos. Legend has it, a guy on YouTube bragged about snagging Bitcoin at a penny during the crash. Think about the balls on that dude. Buying in when everyone else is screaming and running for the exits. What happened after? Bitcoin didn't die. Hell no, it slowly recovered. By the next year or two, it climbed back, hit new highs. It took about 20 months to reclaim that $30 price. But those who held from $2 all the way up became very happy campers. By late 2013, Bitcoin shot past $100, then $1,000. So do the math. If you had bought at, say, $2 in 2011 and sold at $1,000 in 2013, that's a 500 times gain, turning $1,000 into $500,000. Real talk, some people literally became millionaires off this first crash because they had thousands of BTC they bought for almost nothing. The MT-GOX 2011 crash was basically a massive wealth transfer from all the scared newbies who sold right into the hands of the OGs who scooped up cheap coins. It set the stage for a pattern we'd see again and again. Crashes shake out the weak, and the strong get rewarded. Emotional state in 2011, pure fear and disbelief. This was the first big Bitcoin is dead moment. Media didn't pay much attention. Bitcoin was too small then, but in the forums, it was like a funeral. But the lesson was already there. If you kept calm and bought during that bloodbath, you won big. Simple as that. If this is already making your brain tick, if you're starting to see the game for what it is, hit that subscribe button. Don't just sit there like a passive passenger in your own life. Smash that like, drop a comment, show the algo, we ain't here to play. Because this ain't no financial fairy tale. This is raw truth, and we're just getting started. Crash number 2, 2013 bubble pops from $1,000 to $200. Now fast forward to late 2013. This time, Bitcoin wasn't just some obscure nerd thing. It was on CNBC, in newspapers, more and more people hearing about it. In November 2013, Bitcoin hit the big time, around $1,000 per BTC. Imagine that surge. Earlier in 2013, it was like $100. And by end of the year, $1,000. 10x in a few months. The hype was real. Talking about Bitcoin millionaires, the Lambos, all that early meme stuff was starting. And then, crack. The bubble burst hard. The trigger was a mix of things. Regulators and governments started clamping down on the party. In December 2013, China's central bank basically said no banks or payment companies can touch Bitcoin, big old ban hammer on crypto transactions. At almost the same time, the cracks in MT-GOX, yep, them again, were growing. Withdrawals were getting slow. By early 2014, MT-GOX completely collapsed. They halted withdrawals in February and then went bankrupt, admitting they lost track of like hundreds of thousands of Bitcoins. How bad was the drop? Brutal. Bitcoin went from its $1,000 peak in December 2013 all the way down to about $170 at the bottom in January 2015. That's an 83% collapse. Basically, over a year of steady drowning. Every rally got sold off, every hopeful bounce smacked down. It was like death by 1,000 cuts through 2014. People who bought near $1,000. The 2013 newbies, they got wrecked. Many rage quit crypto entirely. The media was having a field day writing Bitcoin obituaries like Bitcoin's now proven to be a failed experiment, blah blah. It was gloom and doom. If 2011 was a niche crash, 2013 to 14 was much more public. Retail investors panicked big time. Forums turned into salt mines of people cursing their stupid decision to buy Bitcoin. And trust in crypto hit a low. This was the first crash where we saw more seasoned investors stepping in. Example, the Winklevoss twins, those dudes who sued Zuckerberg. They had bought a bunch of BTC around $100, and guess what? They didn't flinch. Or Tim Draper, a venture capitalist who in mid-2014 bought nearly 30,000 BTC from the US government, coins seized from Silk Road, at around $600 each. Think about that. Not while everyone else was too scared to touch Bitcoin with a 10-foot pole, these guys were like, yes please, I'll take your cheap coins. They looked past the fear. And sure enough, what came next? Recovery and then some. It took a while. This was a long crash, basically a multi-year bear market. Bitcoin languished in the few $100 range for a couple years. But behind the scenes, things were building. New exchanges, better security, more people slowly getting educated. By 2016 to 2017, but here's the kicker. Anyone who bought around $200 in 2014 to 2015 and held was sitting on a 100x gain at the 2017 peak, $200 to $20,000. That's turning $10,000 into a cool $1 million. And plenty of folks did just that. I know it sounds crazy. If it was so obvious, why didn't everyone do it? Because when the market was at $200, sentiment was terrible. It's hard as hell to buy when everyone else is crying. But the pattern was clear. Crashes are when the winners of the next cycle quietly position themselves. Emotions and psychology in 2014, despair and ridicule. Even Wall Street big dogs were trashing Bitcoin. You had legendary investor Warren Buffett calling Bitcoin rat poison squared around that time, and plenty agreed with him. Retail investors who bought the top felt like fools. But as the saying goes, be greedy when others are fearful. The few who live that mantra here, man, they made bank when the cycle turned. Crash number 3, 2018, the ICO bubble bust, crypto winter. If you were in crypto then, you remember the pain. This was after the insane 2017 bull run. Let's set the stage. Bitcoin had peaked at almost $20,000 in December 2017. Ethereum, the number 2 coin now, hit about $1,400 around the same time. There was an explosion of ICOs, initial coin offerings. Basically, anyone with a white paper and a dream was launching a token, and people were FOMOing in like it's the gold rush. Then reality smacked the crypto world in the face throughout 2018. One trigger was regulatory. Countries started banning ICOs. China did in late 2017. The US SEC started cracking down on projects as unregistered securities, etc. But honestly, the biggest trigger was simply the bubble popping under its own weight. Too many people bought in at crazy highs. Eventually, there were no greater fools to keep pushing prices up. The whole market momentum flipped bearish. The extent of the drop? Absolute carnage. Bitcoin from approximately $20,000 crashed about 84% down to roughly $3,200 by December 2018. Let that sink in. If you had $100,000 in Bitcoin at the peak, it shriveled to approximately $16,000 at the bottom. Ethereum got hit even harder. It went from about $1,400 at the top to about $85 at the bottom, a 94% wipeout. Yep, ETH basically went to single digits if you measure in percentage of its peak. And many of the smaller altcoins, 99% down or straight up dead. So 2018 wasn't just a crash, it was an ice age, the crypto winter. How did people react? Panic, depression, capitulation. I'm not gonna lie. Even a lot of crypto diehards felt the sting. Reddit boards were full of horror stories. I put my savings in this, and now it's worth peanuts. Crypto is a scam, I'm out for good, etc. The mainstream media gleefully reported the crash as the end of crypto. For real this time, they've said this like 100 times. I remember headlines like Bitcoin bus back to reality and all that. 2017 had made crypto a household word. 2018 made it a joke at the dinner table. People who bought in late 2017 got wrecked so bad they swore never to touch crypto again. This was full-on panic selling. Folks selling their Bitcoin at $4,000, $3,000, $3,000 just to salvage something, anything. But while retail was panicking, the big brains and deep pockets were quietly celebrating. This crash was the single greatest opportunity since the 2014 lows. Smart investors and OG believers knew the game by now. Every bubble that bursts in crypto tends to be followed by a bigger bubble later, so far at least. So what did they do? They accumulated. They bought Bitcoin at 80 to 85% off. They scooped up Ether at under $100. Think about that. ETH at $85. Damn. Even though Solana wasn't out yet, other platform coins like it were on pennies on the dollar. Those with vision, like venture funds or just perceptive individuals, started loading up their bags while everyone else was selling for scraps. And then they waited. 2018 turned to 2019. Things were still rough for a while, but behind the scenes, development kept chugging. Ethereum devs were improving the tech. New projects kept building, albeit with much less hype, and Bitcoin quietly started climbing back up in 2019. By 2020, it was like the spring thaw after a brutal winter. Crypto started blooming again. What happened afterward? The ones who bought during the 2018 crash made a killing in the next couple of years. Bitcoin went from that approximately $3,000 low to over $60,000 in 2021. Ethereum went from $85 to nearly $5,000 at its peak in 2021. 2021, that's life-changing money. Another example, those who believed in emerging projects, like buying into the Solana token sale in 2018 to 19, which was dirt cheap, saw astronomical returns by 2021. It was the ultimate buy low, sell high, if you had the conviction. As one publication noted, bear markets basically transfer assets from weak hands, easily shaken investors, to strong hands, patient ones. 2018 was the textbook case of that. The scared money exited, the savvy money entered. Emotionally, 2018 taught a ton of people a hard lesson. Hype comes and goes, but the technology and long-term trend can survive. Those who kept their cool, or better yet, doubled down when things looked darkest, they reaped the rewards. It was truly a massive wealth transfer. And you bet your ass the smart money was ready for the next one too, because they knew crypto wasn't dead, it was just hibernating. Crash number 4, March 2020, COVID panic, when the world ended for a minute. Now this one was nuts, because it wasn't just crypto, it was everything. March 2020, the world faces the COVID-19 pandemic. Global markets went into full-on oh shit mode. Stocks crashed harder than they had in decades. And crypto, being the crazy volatile asset it is, got smoked even worse. Trigger, pandemic panic, lockdowns starting, economies screeching to a halt. People genuinely thought we might be heading into another Great Depression. So what do investors do in that scenario? They sell everything that's even a bit risky. Crypto is about as risky as it gets in many minds, so it was among the first to be dumped. Extent of drop. The crypto market basically had a heart attack. In a matter of days in mid-March 2020, Bitcoin plunged roughly 50 to 60%. It went from trading around $8,000 to $9,000 in early March to an intraday low of about $3,867 on March 13th, 2020. Let's call it roughly $4,000. That was down more than half from just a week or two prior. Can you imagine? Bitcoin lost half its value in like 48 hours. People were freaking out, saying, this is it. Bitcoin's finally going to zero because the apocalypse is here. Ethereum got nailed too. It fell around 46% that same week, roughly from around $200 to under $100. Essentially, a total market capitulation. They even nicknamed one of those days Black Thursday in crypto, echoing 1929, because it was that historic. Retail investors, they were scared shitless. I'm not going to sugarcoat it. I remember seeing so many posts like, I can't take this anymore, I sold everything, I have to protect what I have left. People genuinely thought the world financial system might collapse, so you can't blame them for bailing on some internet coins to hold cash, and pandemics eventually end, right? There's this trader, Bobby Aquino, who said basically he knew the stock market would recover eventually, so he held and even added more during the crash. Same logic applied to crypto for those who believed in it. They saw Bitcoin at around $4,000 as the buying opportunity of a lifetime. Some Wall Street giants even jumped in around then. Paul Tudor Jones, a legendary hedge fund manager, publicly said in May 2020 that he was buying Bitcoin as a hedge because he saw upside. When guys like him and funds like BlackRock started sniffing around, you know the tide is going to turn. And man, did it turn quickly. The crazy thing about the COVID crash, It was violent, but fast. Thanks to governments printing money like there's no tomorrow. Stimulus checks go brrr. The markets bounced back hard. Crypto led the charge. What happened after? Bitcoin went on an absolute tear. The crash bottomed around March 12th to 13th, 2020. By early April, Bitcoin was back above $7,000. By May, $9,000. And then it just kept climbing. December 2020, Bitcoin punches through its old $20,000 all-time high and closes the year around $29,000. If you bought at $4,000 and held to $40,000, which happened by early January 2021, that's 10 times in under a year. Even if you caught half that run, you killed it. Ethereum? From under $100 in March 2020, it was back over $700 by end of 2020, and then exploded to approximately $4,800 by late 2027, 2021. No, that's like 50 times from the bottom in a year and a half. Those numbers are insane. And remember how I said Solana wasn't out in 2018? Well, Solana actually launched around March 2020. Now, I talk about baptism by fire, launching a new blockchain in the worst market panic. Its early price was just pennies or a couple bucks. By November 2021, Solana hit 250 plus. So any early believer in Solana who maybe got in near $1 in mid-2020 saw hundreds times gain at the peak. Straight up millionaire maker. Smart money versus retail. This crash really highlighted it. Retail was dumping in March 2020. They were like, get me out, I'll buy back later when it's safe. Spoiler. By the time it felt safe, prices were already way higher. Smart money, including institutional players, were buying all through that spring. Heck, even JP Morgan's CEO Jamie Dimon, who used to call Bitcoin a fraud, had to concede in late 2020 that crypto had considerable upside. The wealth transfer here was epic. Those stimulus-fueled cheap coins went from panic sellers to the portfolios of those who saw the long-term potential. Emotionally, the COVID crash taught everyone a clear lesson. Never bet against human resilience, and by extension, crypto resilience. It felt like the end of the world, but it was really a new beginning for crypto. By late 2020 and certainly 2021, we had a whole new crop of crypto millionaires, minted because they scooped up cheap during that terrifying crash. So next time someone says, this time is different, crypto won't come back. Remember, 2020, it literally rose from the ashes in months and hit new highs. Crash number 5, 2022, Terra, Luna collapse, and FTX fiasco, the year of betrayals. Finally, we come to the most recent major crash, or crashes, in 2022. This one's fresh in our memory, and oh boy, it was a soap opera of disasters. If 2018 was an oops, we all speculated too hard crash, and 2020 was an external black swan crash, then 2022 was like the year of crypto betrayal, where supposedly stable projects and trusted institutions within crypto just blew the hell up, taking a lot of folks down with them. Let's split it into two linked events. May 2022, Terra Luna death spiral. Terra was this hotshot blockchain with a stablecoin, UST, that was, unlike USDC/USDT, not fully backed by cash, but by an algorithm and some crypto reserves. It promised 20% yield in a lending protocol. Insane, unsustainable returns. But people bought into it. By May, something went horribly wrong. UST lost its peg to $1 and started falling, which caused its sister token Luna, meant to absorb UST volatility, to collapse, basically to $0. I mean 99% down, total death. We went from multi-billion-dollar market cap to a smoking crater in a week. Trigger, basically a bank run on an algorithmic stablecoin. This was a huge shock. Billions in value evaporated, investors big and small got wrecked. One famous investor, Mike Novogratz, had gotten a Luna tattoo because he was so bullish. Yeah, that aged poorly. The Terra implosion set off contagion. Firms that were overexposed blew up too. A big hedge fund, Three Arrows Capital, went bankrupt. These guys were considered geniuses during the bull run, and boom, gone. Then Celsius, a major crypto lending platform, froze withdrawals in June because they were basically insolvent after the market drop. After all this contagion, Bitcoin fell below $18,000. The first time under $20,000 in like 2 years. And it was down almost 70% from the November 2021 peak. In that single month of June 2022, BTC dropped approximately 37%, from approximately $32,000 to less than $18,000, and ETH dropped approximately 44%. Brutal, Solana, which had peaked around $260 in 2021, got dragged down under $40 during the spring and even lower later. Sentiment. Awful. Crypto winter was back with a vengeance. By summer 2022, everybody was cautious, licking wounds, thinking, okay, maybe that was the bottom. Then came part 2, the knockout punch, FTX collapse in November 2022. If Terra was like a natural disaster, albeit man-made, FTX was straight-up fraud at the heart of the industry. FTX was one of the world's largest crypto exchanges, led by Sam Bankman-Fried, SBF, who had been kind of a poster boy for crypto, appearing before Congress, plastered on magazine covers as the next Buffett. People trusted FTX. Millions used it. Well, it turns out old SBF was playing dirty behind the scenes. He'd been using customer funds for crazy bets through his trading firm, Alameda Research. In early November 2022, leaks and rumors started flying that FTX might be insolvent. Then a rival, CZ from Binance, tweeted some shade and basically triggered a bank run on FTX. In a matter of days, FTX imploded. They paused withdrawals, then filed bankruptcy. SBF went from king of crypto to indicted and in handcuffs. It was an absolutely seismic event. Like, you imagine the New York Stock Exchange just collapsing overnight. That's how it felt in crypto land. The impact on markets? Yet another big leg down. Bitcoin, which had been hovering in the $20,000 range in fall 2022, crashed to around $15,000 in the aftermath. That was a new low for the cycle, and the lowest BTC price since 2020's rise, basically a 2-year low. Ethereum dumped back down to like about $1,100, close to its own June low. And Solana, oh man, Solana got obliterated because FTX/Alameda had been huge backers of Solana. ESL was around $36 in early November. After FTX's collapse, Solana plunged to about $12 in a matter of days. That's roughly a 2/3 drop just from the FTX shock. From its all-time high, Solana was down over 95% by late 2022. To think about that, a top 10 crypto, one of the shining stars of 2021, lost 95% of its value. People were writing obituaries for Solana left and right. So long Solana became a headline. Many other altcoins also hit rock bottom levels. The mood, absolute despair and anger. This wasn't just market forces, this felt like betrayal. Regular investors were pissed. SBF screwed us. These crypto CEOs are all frauds, etc. Trust in centralized players was at an all-time low. It was ugly. Like everyone in the room got punched in the gut. The 2022 crash flushed out a ton of bad stuff. Ponzi schemes, over-leveraged funds, shady CEOs. What remained were the strong survivors. Bitcoin, Ethereum, and other solid projects. Yes, even Solana survived the storm. And guess who was quietly accumulating during all that fear in late 2022? Yep, the smart money. While retail was selling in disgust, big players were picking up BTC for under $16,000. Firms like BlackRock and Fidelity were even more intrigued. In 2023, BlackRock filed for a Bitcoin ETF, basically a way to bring even more big investors in, because they saw value at those lows. As one market strategist said, by the time SBF's trial was going on, crypto had largely moved on and put that awful year behind it. And indeed, the comeback started in 2023. Bitcoin more than doubled off the lows. By early 2023, it was back to around $30,000 and kept grinding up after. Ethereum bounced from $1,000 back to $2,000, $3,000, etc. Solana, the dead coin, climbed from that $12 bottom to $25, $30, and kept surprising people as it regained strength. It essentially tripled in the months after FTX collapse, proving the haters wrong. By 2024, the crypto market sentiment had flipped bullish again, with the overall market cap climbing back above $1 trillion. People who stayed calm and bought quality assets during the Luna FTX crash are now, in 2025, way better off. As harsh as it sounds, money in crypto, and markets in general, tends to flow from the weak hands to the strong hands during crashes. It fast-tracked fortunes by 2021. And 2022's meltdown shook out the frauds and handed smart investors the chance to buy generational lows. And trust me, a bunch of them are grinning in 2025 because of it. So next time you see crypto prices diving and everyone around you is shouting, "Get out, it's over, take a deep breath," remember these stories. That's how you get wiped. But if you've done your homework on Bitcoin, Ethereum, Solana, the solid projects, and you believe in their long-term value, then a crash is when you strike. It's when you go from merely wishing for life-changing money to actually positioning for it. As the old saying goes, with a twist, buy when there's blood in the streets, even if it's your own blood. In crypto, especially, those who can do that are the ones who come out the other side with their portfolios 10x, 50x, 100x bigger. So, the next time the market tanks and you feel that pit in your stomach, remember this video. Hear my voice yelling, "This is your chance. Don't you dare sleep through it." All right, that's my sermon for today. 5 crashes, 5 massive opportunities. If you made it this far, respect. Most people bounce when shit gets real, but not you. So don't be a ghost. Subscribe, like, and drop something in the comments. Tell me what crash you lived through or slept through. Either way, stay close.